The Trump trades have all played out. Bitcoin, big tech and bond yields are all surging as his comeback became a reality. What assets money may flow to next?
So, if we have an equity market that could rise by 20 to 25% within a year, that's pretty significant.
What do you think, Greg, the lesson should be for investors on the prediction market versus the polls? Is the lesson always follow the money?
Well, it seems to be, doesn't it?
Major US stock markets, the S&P 500 and Nasdaq, have hit new records, marking the best post-election day in their history. That's on top of the lead-up to the US election, where the same markets had their best pre-election performance since 1936, according to Investopedia. Investors were favouring bank stocks as well as the US dollar and gold. As the result rolled in, Bitcoin had its biggest moment.
Here we go.
Hitting an all-time high of $75,000 US on America's election night.
Satoshi couldn't have written a better script, having it hit a new all-time high on the night of the election. I think one of the most important things is we have the first Bitcoin president.
Hello, Bitcoiners. Thank you very much. Hello, it's good to be with you.
The frenzy flowed into BlackRock's Bitcoin exchange-traded fund, taking in $1 billion of inflows in the first 20 minutes of the market opening post-election result. On the night, the prediction markets bet the polls, with billions of dollars in punts pricing in a Trump victory before it was actually officially announced. Traders executed that accordingly on the bond market. This is how the short-term 2-year and long-term 10-year bond yields responded on election night, going vertical according to JB Drax Honor. That was on top of increases in the weeks leading up, as traders priced in risks to inflation from Trump's proposed plan, including higher tariffs on imports. Analysis of candidate campaign promises suggested Trump would trigger a deepening in the US fiscal deficit of around $7.7 trillion US.
Just because the promises he's given of significant tax cuts are generally estimated to be far larger than the ones that Democrats have. And I think we would end up in a deficit situation.
Whether that occurs or is allowed by Congress is yet to be seen. But US-based economists have their concerns.
The United States federal deficit is a little bit like those fancy credit cards. They don't tell you what the credit limit is. There is a credit limit, but the only way to find out is by hitting it. And I think that's what has economists concerned.
Tiger Brokers Chief Strategy Officer Greg Bolland has been watching all assets closely before, during, and after the US election. Look at Tesla. I mean, that was up as high as 15% at one stage this morning.
Yeah, well, so it's nearly there again. So
never bet against Elon, right?
Well, never bet against Elon. He's obviously backed the winning horse here.
He says if it's anything like the last Trump presidency, stocks will be in for a boost. Greg, good to see you. Thank you so much for doing this. Big week.
Yes, thank you, Madison. Lovely to see you again. And yes, a huge week this week and a huge week last week. So last week we had 256 of the S&P 500 stocks report, and then this week obviously we've got the election, and tomorrow morning New Zealand time the Federal Reserve probably will, 99% chance of also reducing rates by another 25 basis points.
Great, so no sleep between us until the weekend then. That's when we can rest,
Correct.
Right?
Yeah, and I ran the Auckland Half Marathon last Saturday just to keep myself in tune.
Oh, that's great. Look, I want to ask you about your Trump trades, if you don't mind sharing. How were you pre-positioned going into this, and if you don't mind telling us, how have they played out for you?
My own personal trades. Mostly been selling puts against stocks that I think are going to rise. So with stocks like Qualcomm, their reporting is tomorrow. The stock price is around 160 yesterday. It's around 170 today. And so I'm happy to buy it at 150. So if I sell a put, I'll make some money out of that put premium that someone's prepared to pay me. So that's how I've done it, just by selling put options on markets on stocks that I think are going to go higher.
You're always the derivatives guy. I love it. Let's talk about all those broad Trump trades that we're seeing across markets right now.
Yes.
Equities are certainly up in the
Yes.
US across the board significantly. Big tech a real winner. Banks a big winner. Bitcoin, USD. I mean, give me the colour on how this has played out and how strong it is.
Okay, so the main thing is what the markets want is certainty. And this has been a very decisive win for Trump and also the Republicans in terms of the Senate and also Congress. So it's definitely a move to in their case, the red, or to the right, towards a Republican government. And in terms of the Trump trades, as you said, there's certain stocks that have done particularly well. And if we look at the markets today, the Trump-related stocks themselves, like Trump Media, is actually more or less flat, although yesterday it was up around 50 or 60% in the after-hours market last night. Today the financials have been the big winner, and definitely the top two out of the Dow stocks that have gone higher is Goldman Sachs and JP Morgan, both up. JP Morgan up 10.5%, and Goldman Sachs up about a little bit more than that. But also, the likes of Morgan Stanley and Citi and Wells Fargo all up between sort of 8.5% and 12.5%. So they've been the biggest winner in terms of stocks. And if you look at the S&P 500, out of the top 20 gainers, 11 of them are financials.
Why are financials up so strongly? I'm assuming that's because investors are now taking out the risk of extra regulation, right?
Yes, extra regulation, tax perhaps, and benefiting smaller companies. Companies grow, they need to then list or get more capital, so they go to the big banks for that capital. And also, more certainty around interest rates going forward and inflation coming down. Definitely the job numbers last week were pretty weak. The ISM numbers this week were reasonable. So the chances of probability of a rate cut on Friday is very high.
Where do you think equities could go from here? If you look at history, how have US equity markets performed when there has been such a decisive, like this, election result and also a Republican result?
Yeah. Okay. So in terms of the results, so we can look at charts in terms of returns. The day after, the week after, the month after, and the year after, if you like. And if you look at the last two elections, so the Biden election, the day of the election, was certain that he was the president. The market went up 2.2% in the S&P 500, whereas previously under Trump it went up 1.1%. And the average between 1984 and now is actually a decrease of about 0.5%. So the S&P rallying today around 2.6% is higher than it's ever done in the last period from 1980.
Wow, so this is actually rare, and that's considering that it was already the best pre-election performance since like 1936 heading into this.
Yes, that's
so
correct.
This all net is pretty incredible for equity markets.
And the equity markets will continue to go higher, and in my opinion, and if you look at the returns on the S&P 500 in the year after an election, it's around 16.5%. Under Biden, it was around 24%, Trump around 24% also, and also Obama in his last term, it was up around 26%. So, if we have an equity market that could rise by 20 to 25% within a year, that's pretty significant for people who wish to invest in equities, and significant for New Zealanders who have KiwiSaver funds, and a lot of those KiwiSaver funds invest in these top tier companies in the US.
No such thing as an absolute sure thing though, Greg.
No.
If we consider the risks, it is proposed that Trump would be more inflationary to the US economy through things like direct tariffs on imported goods into the US. How could slightly higher inflation, if that occurs, if we get more borrowing and a larger fiscal deficit in the US, how could that impact US company earnings?
Yeah, certainly. So in terms of the tariffs and the like, it's definitely something that the market may increase, and Moody's put out a report saying that under a Trump government, inflation could go from the 2.5% to 3.5% by the end of 2025. Under Harris, it would have maybe stayed the same or even be lower. So it definitely is cause for worry in terms of inflation. Prices may go up, but 1% is not too high in terms of, under the Biden administration, it was the third worst term in terms of inflation, and on average inflation rate for that whole term was the third worst since the 1980s.
And the third largest fiscal deficit on record,
Correct.
third only to
Yes.
2020
Yeah.
and 2021, which were COVID years.
Yeah.
So absolutely
Yeah.
extraordinary.
So the things that you mentioned in terms of fiscal deficit, there's definitely cause for concern if Trump doesn't increase or reduces tax rates or keeps tax rates the same, then the income earned from the federal government is less. So both parties are fiscally irresponsible. There's no doubt about that.
More inflation could actually be good for a higher fiscal deficit because the US government could just inflate more of that debt away, couldn't they?
Correct. But also the biggest problem under the Biden administration, the differential between inflation and wages, wage growth and inflation growth, or price growth if you like, was prices were 3 or 4 times higher than wage growth, and at the end wages were slightly ahead in terms of growth. And so if under a Trump administration more jobs are created, particularly in smaller companies, because of tariffs and protectionism, then wage growth should be hopefully above the 3.5% that inflation is. So the whole premise of the Trump trade and the Trump election has really been the effect on the economy of the Biden administration. And after COVID, most governments have been elected out. So he was there with fiscal easing or a loose fiscal policy to help create more jobs and keep the economy going. And the same happened in New Zealand, and we're paying the cost now, but that also caused high inflation.
We aren't quite seeing the inflation potential expectations on the equities market, but it is playing out quite strongly on the bond market.
Yes.
Bond yields have been surging. They went pretty much vertical on that immediate election result.
Yeah.
That means with the inverse relationship that bond prices are falling. What does that mean for fixed income investors that are in bonds in US Treasuries at the moment? And could it longer term signal actual better returns in US Treasuries?
Yeah, certainly. So in terms of the 10-year end of the curve is definitely a lot higher, but interest rates coming down at the short end, particularly if they drop again by another 25 basis points for the cash rate this Friday, there's definitely a steepening of the curve between the short-term rates and long-term rates. And so the people will either move into shorter-term products like the treasuries and the like, where the yields may go up because they're going to be borrowing more, so therefore they have to offer more interest and more risk, obviously. But also, people will move out of treasuries, longer-term treasury bonds and long-term corporate bonds into equities, because equity markets are likely to rally from here.
Bitcoin?
Bitcoin.
Where does that go from here?
Well,
New all-time high on election night.
Yeah, that's right. So iShares BlackRock has it has the predominant ETF, which started at the beginning of the year. That was up 8.8% overnight. And then if you look at the individual Trump trade stocks that could benefit from Bitcoin changes, Coinbase was up 32%. This morning, and Marathon Digital up 19%. So significant increases in the prices of those related to Bitcoin and cryptocurrency.
How do you see a Trump presidency actually changing the game for Bitcoin investors? How material is it?
Hopefully over time there'll be more regulation of Bitcoin. But that's probably against Trump's thing in terms of regulation. But people who are investing in these sorts of products need certainty, and the likes of an ETF on Bitcoin, like the IBIT, which is offered by iShares and BlackRock, provides a way or mechanism of investing in these markets without having to store the Bitcoin or worry about your passwords and all that sort of thing. So movement towards more certainty around the process of clearing and settlement and trading and security of the Bitcoin will help, and definitely the likes of the ETF has helped with that, and that may long continue.
And now under this leadership, it will be more help than hinder, you think, for that industry?
Correct. Yes, and definitely he has been a big proponent of Bitcoin.
What do you think, Greg, the lesson should be for investors on the prediction market versus the polls? Is the lesson always follow the money?
Well, it seems to be, doesn't it? So if you look at the polls right up till till the booths closed, it was a 50-50 game. whereas the tipsters and the like have said Trump was going to win from weeks ago. So and the odds of your payout being high on a Trump victory was quite low. So definitely follow the money, and that's what's happening at the moment.
Thank you so much for your time, Greg. Always good to chat.
Thank you. Thank you.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.